Welcome back, Chart Addicts. So, not a very fancy video today. We have the Federal Reserve news in about 30 minutes. I wanted to make sure that you guys are aware of what's going on, some things to watch out for, and some things to make sure that you are prepared for heading into this Federal Reserve meeting. Now, let's talk about the biggest things that economists are focused on. Number one is, how high is the Federal Reserve going to go in their rate hike? And the second one is the Fed going to indicate some softening of their stance going into December? Or they're going to talk about inflation still running rampant and the fact that we're going to have to continue quantitative easing well into December and into next year? So let's walk through those two scenarios and walk you through what the outcome is going to be. The Federal Reserve deciding to raise interest rates by 75% puts an immense amount of strain on the market. However, it's expected because inflation is still running high. As long as inflation is still running strong, the Federal Reserve has to continue the pace of quantitative tightening, which is going to significantly reduce the amount of activity in the real economy. Most people were looking for some sort of Fed pivot, a pivot meaning a change in monetary policy or a change in central bank policy. In this case, a pivot would indicate that the Federal Reserve is no longer tightening monetary policy, but instead they're more focused on printing money and saving us from a recession. The Federal Reserve has indicated that inflation is so high that they cannot worry about the markets, they can't worry about the real economy, and they're willing to send us into a recession in order to combat inflation. And so if we look at a recession is over here, which is basically the economy freezing to death, and high inflation is over here where the economy burns to death. And so you kind of have these two scenarios where they can't allow inflation to run too hot or else the economy will collapse on itself. However, because we're trying to fight inflation, now we're going to be causing a recession in the real economy. Understanding this dynamic is very important going into the next 2 months because the Federal Reserve and the US Treasury are now at odds where the Treasury is trying to print money in order to save us from a recession, but the Federal Reserve is more so focused on beating inflation so that we can get the economy back under control. So there's no fancy video. I actually just moved down here to a new apartment in Miami, Florida. I want to make sure that I share this information with you before the Fed meeting at 2 p.m. We're expecting a 75 basis point hike, and we're expecting the markets to rally bullish based on the previous Federal Reserve meetings. If you go back and backtest the previous Federal Reserve meetings, you'll notice that these stock markets, or US equities specifically, tend to rally the day of the Fed meeting. And so if you're trading indices today, you're going to notice that a lot of people are positioned short. However, the market's most likely going to spike bullish, making everyone think that the markets are optimistic, making everyone think the markets are bullish. And then later in the week, we end up getting a true direction, which is basically a continuation of this selling pressure. So just to go through and recap what's happening, a lot of institutions were signaling a 50 basis point hike. We don't believe that that's possible. Most likely, we're going to get a 75 basis point hike from the Federal Reserve today on their November Fed meeting. There haven't been a lot of news events that have led up to this decision, but in the December meeting, they're going to have tons of data to look through to make a better and more informed decision. So we look at the ADP number that came out this morning. We look at the JOLTS jobs report, the number of open jobs in the economy that released yesterday. And we look at some of the unemployment rate and the NFP that comes out on Friday, CPI that comes out in a few weeks, and GDP that comes out in a few weeks. The Federal Reserve is going to have tons of data in order to make a decision in December about what's happening in the economy. So that's the landscape. Expect a 75 basis point hike. We are expecting markets to rally shortly after the Federal Reserve meeting. And then in the following days, we can expect a continuation of the overall trend, which is to the downside. Chart Addicts, I hope you guys enjoyed this quick video. Keep an eye out for the Federal Reserve meeting. And we're going to be releasing more videos after the Federal Reserve meeting, talking about what's happening in the economy and how you can position yourself to take advantage. Again, Chart Addicts, this is Roy signing off. Take it easy.